Okay. All right. Thanks again, everyone, for attending today. It's much appreciated. Again, like I said, my name is Marla McKenzie. I'm head of operations of Catalysr. And we're joined today by Amit Shah from the StartUp Shop to discuss the Australian government stimulus package and what it means for businesses and individuals. I'd like to start really quick by acknowledging the traditional owners of the land that we now call Sydney, that we are currently on, the Gadigal of the Eora Nation. We pay tributes to past, present, and emerging leaders. So on that note, Amit from the StartUp Shop, please do take it away. Tell us how you've been going over the last 6 weeks, how everything's going at the StartUp Shop, and then from there we'll jump into what the stimulus package means for businesses.
Yeah, of course. Thanks, Marlo. It's been a pretty full-on 4 to 6 weeks. To give some background, we have a business that works does financial work, CFO work for tech startups or high-growth companies. And what we've seen over the last month is a lot of companies facing trading conditions that they've never seen before. Unprecedented drops in revenue, some to nil overnight. We've seen businesses facing uncertainty in terms of funding, in terms of payments on outstanding invoices, and in terms of being able to meet payroll obligations. So over the course of the last month, we've been working with businesses to help them navigate their way through what we think the next 3 to 6 or however many months will be. And in the background of that, 3 levels of government, but starting mostly with federal, have announced some stimulus packages. And I think that's what we're here to discuss today, of how they can apply for businesses, how to best take advantage of those when they'll apply, and how to use them to see you through this period to get back to normal trading.
Great. And sorry, Amit, I was just going to say before this, first of all, if you have any questions for Amit, please do put them in the chat. We'll get to them. And also maybe just give us a little bit of background about yourself and about who you are.
Yeah, of course. So I started the StartUp Shop 7 years ago, just out of an enjoyment of working with tech and with growth companies. We currently work with about 120, 130 companies, mostly in New South Wales. My background's accounting, but yeah, we like to work with businesses to see them through on the journey, and from idea or from just incorporating to hopefully growing to an international market. And we live in the Startup Hub in Fishburners, which is where I think a few of you are as well.
Yes. Well, great. Thanks for that. And let's just jump right into it. So there's quite a bit. I think these things are confusing at best, but especially because I think the government's been, I guess, responsive to feedback to the different stimulus packages, that every day, the result is that every day something new gets, announced, right? And then there's something from the federal, and then there's something from the state. But I guess for businesses, right? So what does the Australian government stimulus package mean for businesses right now? Like what are available to them?
Stimulus measures, you're right, by the way, they've been announced bit by bit, and that's because these policies have been made up on the fly. So I think they've done the best they can. What it means for businesses primarily is that the government is trying to fund businesses maintaining employment relationships, or keeping their staff. Now, a lot of businesses have no staff, and they're not completely excluded, but they're less able to take advantage. For people who have staff, there's measures in terms of the tax withholding or the PAYG stimulus. There's measures in terms of rebating some who have been affected up to $1,500 a fortnight per employee. There are measures for higher growth companies as well in terms of depreciation or accelerated tax write-offs. But I think most of the conversations we've been having, and most of the early stage or high growth companies, what they're really going to be able to take advantage of is measures that involve the employees that they have.
All right, well, let's get into that. So you mentioned PAYG tax credits.
So the PAYG tax credits is a stimulus measure up to 100K, which is 50K between now and June and 50 between July and October, being equivalent to the PAYG withholding you have on your employees. So what they do is they take the wages period that you're reporting in your payroll from January to June. They say whatever the equivalent PAYG is either not payable to the tax office, and if that causes your BAS to go into refund, then they'll refund you the money, which is really positive. And an equivalent of that is then matched again in the first quarter of next financial year. So businesses that withhold, and the figure's around 8K a month, will receive a 100K benefit over that 6-month period between now and October. The good thing about this is it's automatic, and all you have to do is lodge your BASs, lodge your activity statements along the way, and then the ATO will automatically calculate the lower amount payable or the amount refundable, and they'll process that for you.
Sure. And so in the event that they process that for you, and as you said, you can go into a position where you are entitled to refund. Is that how are you then given that refund?
Which is automatic again. So the ATO usually has bank account details for most businesses. If it's the first time your business may have ever received may have received a refund, the ATO can be updated through the business portal or through the tax agent portal if you're using an agent. And what we've seen over the last week is that the refunds are taking somewhere between 5 and 6 days, but they're pretty good, like in terms of getting the money back into the account when it's due.
Okay, great. So I guess in that, so that it does the tax credit, how does it supports the business owner by way of essentially paying the income tax, like the income tax of the employees? Is that correct?
Yeah, I mean, to use some rough figures, the average withholding tax is somewhere between sort of 20 and 35%, depending on how much you pay the employee. So it's allowing the employer to receive a net benefit of keeping that person on board by just not having to pay that component.
Sure. Okay. And I guess while we're on the topic of employees, let's jump on to JobKeeper. So there's quite a bit around JobKeeper.
Yeah.
And so I understand that you're currently processing JobKeeper as well for multiple, like lots of your clients.
Yeah, I think this is going to be the biggest one that people will be talking about this week and next. So at a really high level, $750 per week per employee, per eligible employee for businesses that qualify. And all the talk right now has been about how do we qualify as a business. Initially what the ATO said was a 30% drop in reportable revenue for a period of this month, being April, last month, or last quarter versus the previous year. So we have a couple of reference periods and then the prior year as a comparative. What's been announced yesterday is some alternative measures for startup businesses. So for us personally, and I suspect for Catalysr as well, there's lots of businesses that are either really early stage, they've been formed in the last 12 months, or they're high growth. So the fact that they are more than 30% higher than the previous year is actually not reflective of the fact that they've been impacted by the coronavirus, because the real reference is last month they were really high and this month they've dipped, and that's a better analysis. So what the ATO's released yesterday is 6 alternative tests, and it's specifically for early stage businesses, it's for high growth businesses, for businesses that have gone through an acquisition or a restructure, and there's a couple of others, of which we have a link that we've sent around, and I can share after this as well. And so what I'd recommend is, if you're a business that isn't a traditional business, or if you're cyclical in terms of how you earn revenue, then don't be dismayed by not necessarily meeting the initial 30% criteria, but it's worth following up, specifically when you have your figures ready and you can do some more calculations.
Sure. So yeah, so I guess kind kind of going back to what we were saying earlier about how there have been so many announcements and so many, I guess, changes made on the fly to cater for everyone. There is a lot of confusion around eligible businesses and then subsequently eligible employees.
Yeah.
Eligible businesses, lots of changes been made to that. And then there's, sorry, so you were saying there's the ATO's just launched additional tests, and those are available online, yeah?
They're available. I'll share the link as well.
Yeah,
They just came up.
Yeah, okay, yeah. We'll send it around in an email. I think all the things that we talk about, you know, after the session. But yeah, that's great. So someone, a business owner, can just jump on and check if they're eligible.
Yeah, they can. The language isn't great, but there is a lot of commentary out there, and again, some that we can share that's reasonably well explained. I think the process of announcing this over a couple of weeks has been the really hard part. I like to believe that after yesterday's announcement, that's sort of it. So the information that's going to come out, it's now out there. The next week is critical. So if you think you're a business that qualifies, especially if you qualify as a drop-in revenue from March, you need to register by the 30th of April. And so don't wait for anything else to come out. The process to register, there's 3 steps to it. One is registering with the ATO, which can be done again through the business portal or using an agent, which should be any accountant or anyone who prepares BASs as a business. 2 is working out who the eligible employees are. Again, there's lists, but at a high level, it's people who are full-time employees before 1 March this year, or casual employees who have been working with your business for more than 12 months at that date. It's people who are Australian residents. So unfortunately, it excludes some visa holders from that. So you have to check on the residency status of your employees. And it's people who are only claiming a JobKeeper application from one business. So if it's going to be your business, you need them to sign a declaration. So you register first with the tax office. You get these declarations for all of your employees, and then you lodge payroll as you normally would. And every time you lodge it and you go through the single touch payroll process, which is how it gets reported to the tax office, that's how your stimulus gets recorded over the course of the next up to 6 months.
Okay, so if you already have single touch payroll enabled, then you shouldn't have to then contact the ATO again. Is that correct?
After the initial declaration, no, you'll report through your payroll, correct, as you normally would pay people.
Okay. So if I wanted to opt in, if I wanted to put my employees on JobKeeper, I already have my business already set up with single touch payroll. I need to gather like stat decks essentially from all my employees that they're effectively not claiming JobKeeper anywhere else. Is that correct?
Right, and it's a ATO Prescribed Form, so it's not as sort of hardcore as a stat deck. It's available on their site, and again, a resource that we can share just after this. But it just says that they're eligible and they're not claiming for more than one person.
Sure, okay. And we've got a question here from Josh saying, if a business owner is full-time and being paid a salary from the business, does this qualify them as an eligible employee? Yeah,
well, yes, but there's a couple of points there. So if they're working full-time for the business, they can qualify. For each business, or if you're a sole trader, or if you're a partnership, and then I guess finally, if you're a beneficiary of a trust. So the different ways you can structure your business. A business associate, which is, again, a director of a company, just one of them, one partner in a partnership, a sole trader entity, or one beneficiary of a trust can also qualify even if they're not an employee. So what we have is a lot of people who are just starting, they just have their ideas at the moment. So they've registered as a sole trader, which is a pretty common way to start their business. And they would also be able to qualify, assuming they met the same 30% drop-in revenue eligibility requirements as we talked about before.
Okay. And we've got another question here. What about permanent part-time employees that get paid less than $750 a week?
Yeah, that's a really good one. So there's a couple of things that they've highlighted, the government's highlighted with these measures, the amount that they're going to pay is blanket. It's uniform for everyone. So if you have an employee who qualifies, like a permanent part-time person, but they earn less than that, you have to gross them up to the $750 a week. Now the gross up payment is called a JobKeeper supplement. We use Xero for a lot of our work, and they've actually built all of this into the back end. I don't know about MyOb and others, but the accounting software providers have been really proactive about this, and I suspect the others would have done the same. It means if someone's paid, for example, $500 a week, you have to pay them the extra $250. It's a special payment. It's not subject to superannuation, but you can't withhold the money as a business. And they've been really vocal about that, about clamping down on businesses who claim this and not passing it on.
Sure, yeah, we've seen quite a bit of that in media.
The other thing is that they've been really vocal about is if you go down this path, you have to pay the employees before you get the money from the government. So there's a couple of issues there. One, cash flow. You have to fund this yourself, and the government's sort of talk of go talk to your bank is just not realistic. But it's again part of the same measure. They don't want to pay businesses who then pocket the cash. So you need to be making a declaration that I've put people through payroll, I've paid them, and now I'm getting compensated, not I'll pay them after I get the money. And it's a pretty important distinction.
Sure. And just confirming, the deadline for registration is the 30th of April. Is that correct?
The 30th of April for any businesses that have already received a decline. So if you want to receive payments from the start, then you have to get it in this month. There is a caveat of businesses who haven't had a decline because they had existing contracts, and maybe you'll have a decline in June or July. And I believe there is the ability to register later if you're not impacted now, but you might be down the line. But I'll sort of put a asterisk on that because I don't know the exact process just yet.
Sure. And so in terms of lead time, so let's just say I register my business for JobKeeper. When am I as a business owner set to get the first, I guess, subsidy, if you will?
So we've heard first week of May. And it's hard. Like the ATO has been pretty good about this. As I said about the PAYG at the start, 5 or 6 days that they're getting refunds into people's accounts. But yeah, realistically, start of May is when people can start seeing the reimbursements coming through.
For JobKeeper, and will those just come those will also be done through the ATO? Is that correct? And be deposited straight to their bank accounts?
Yeah, also through the ATO, and specifically for the registration of JobKeeper, they ask you to confirm bank account details again. So you can be really specific about which account it needs to come into. Okay.
And all right, we do have one question here about JobKeeper recipients employees who are, I guess, on JobKeeper benefits, if you will, receiving them from 2 different businesses. Do you see that as a possibility at all? And if it is, what would be the kind of, I guess, repercussion to that?
Yeah, look, so the repercussion for that's going to be on the employee. All of this is monitored by declarations through tax file numbers and single touch. So don't do it. You'll get caught, and it'll be not amazing. The declaration you sign, which is the one that will circulate after, specifically says I'm only claiming this from one employer, and yeah, there's no real way to get around that, and I think you shouldn't anyway.
Sure. Okay.
I'll add one thing though. That's for JobKeeper. What they have said is you can earn money from somewhere else. So if you get stood down and the employer says, you know what, can't pay you, but we can apply for JobKeeper. Here's your $750 a week, which is going to get reimbursed. It doesn't stop you from getting paid employment somewhere else. If you need to supplement your wage, or if you have the ability to go get another job, you just can't get the stimulus JobKeeper payment from 2 employers.
Sure. So we've got another question here. from Dev, who says, there's a few clients who are eligible, so who have had more than a 30% reduction, have paid their employees for April. Now they've already processed their payroll through Single Touch. Does the tax agent select the eligible employees from the portal? Or would that be a business owner?
Sorry, I think I know what you mean. As part of the registration process, it asks you to say how many employees will be eligible for April. So on the assumption that maybe you haven't lodged all the pay runs yet in your system. So either the tax agent, Dev, or the business owner, whoever's doing the registration, will just mark the number of employees, but it should also match the pay runs that you do in the background.
Sure. Okay. I want to move on to depreciation. And what are some of, like, other than, I guess, the bigger elements like JobKeeper and like tax credits, tax withheld credits. I wanted to discuss things like depreciation and I guess other avenues of deductions or
Yeah, of course. So I think a lot of the initial conversation around stimulus is on businesses that they're doing everything they can to keep the lights on, and that's really important. And I think that's a big part of it anyway. There are, of course, businesses who are either less impacted, at least in an initial cash flow perspective, or are impacted but also have cash reserves, and they have the ability to take advantage of other measures. So the two around depreciation, one is an increase in the instant tax write-off threshold from 30 to 150K between now and June. And what that means is you could buy a significant asset up to that amount and get a full tax deduction for it in this year. Again, caveat, you can't buy a luxury car, which still has a cost limit of roughly 57,000. So you can't go out and buy a Tesla, unfortunately. But in terms of big machinery or whatever else it might be, what they're sort of targeting here is businesses that maybe are profitable and could use the tax advantage. It's definitely a measure to stimulate the economy. So they want to get people, if this is on the cards for you, buy it now, get the tax benefit straight away, and keep money pumping through. The other one's an accelerated depreciation measure, whereby you can double the rate of a depreciation. So again, this is usually for businesses that are profitable, that are going to be paying tax, and that have existing depreciating assets, or it could be existing vehicles as well, which is quite common. And the amount of depreciation they're able to claim will be doubled between now and I believe next year. So that's two at a federal level. I think once you're working with businesses, or at least for us as we're working with businesses, and once you move past the staff aspect, which is the PAYG and the JobKeeper, there's also a lot you can be doing in the next 6 months at different levels of government. So at a big business perspective, I know New South Wales and Victoria have stopped payroll tax for 3 months, and that can be material if you have big payrolls. We're expecting further concessions next year, but not yet announced or not yet finalised. New South Wales specifically has a $10,000 small business grant, which I know that processing really quickly. We've had clients who've had the money come into their accounts for a pretty low threshold of substantiation of, are you affected by this? Show me how, show us some financials, and they can get it processed. And then down to a city level, which is now pretty regional because I'm in Sydney, and I think many people are, but City of Sydney specifically has grants for hospitality, for cultural and arts businesses. They have grants for people who have been particularly impacted by lower walk-by traffic in the city, and and back up to estate level. Many of the states have commercial rent measures in place to do things like stopping evictions for 6 months while people have uncertainty for dictating to landlords various levels of rental reductions or deferrals. And at a high level, they've said you need to negotiate directly with your landlord, but the specifics are a 3-month reduction equivalent to half of your decrease in turnover as a percentage, and then a 3-month deferral of rent for the same percentage. So it allows businesses who have really struggled to at least look after the two probably biggest costs in their businesses, which are labour, we talked about at the start, and rent, and then work out through maybe some other grants how they're going to get by the next 6 months.
Okay, great. So I guess this brings us to our next bit, which is, individuals. So what does this mean for, I guess, for individuals. So, we've all kind of brought our work home with us now. So things like, what are, I guess, some of the tax deductions that as individuals that are working at home now full time can look into come tax time?
Yeah, of course. So everyone's in the same boat working at home. The ATO has put out a measure on this to say, as a blanket rule, you can claim 80 cents per hour for the hours you work at home as a tax deduction. Now, in prior years, that was 45 cents. So they've increased it, I think, to acknowledge the fact that people, genuinely are at home and they're using all of the available facilities and internet and everything else. It's pretty easy.
80 cents?
80 cents per hour. It's both not a massive amount, but it's an easy calculation. If you are renting, so if you don't have a mortgage and therefore go down some capital gains routes, you're potentially able to claim a higher amount than 80 cents by saying, in my house, I have a dedicated room that I use as a home office, and therefore I want to claim a portion of the rent because as of right now or during this period, I'm required to work from home. The ATO is pretty specific on this. It can't be a communal space. It can't be sort of, I work at the breakfast bar for 3 hours a day, but then I also have dinner here. It has to be dedicated. The deduction's based on floor space. So it's a 3 by 3 meter room over the course of a 100 square meter apartment sort of thing. And maybe I'll claim 9% on that example. So it's a bit more involved, but if you really do have a space that you're using as a study, it'll be higher than the 80 cents and it's potentially worth looking into as well.
Sure. I think, I don't know about you guys, but I'm like a huge tax deduction person. So I'm like, I want to know. So what about, I guess, let's just go into maybe some scenarios here, right? Like what is, what is an early stage founder, how do they look at all of this and try to navigate it? Let's just say an early stage founder who, who is working currently from home, whether it be a dedicated space or not, it doesn't matter. And who is, is getting revenue from their business, but wasn't yet, I guess, turning a profit. What do they do? I guess, like for example, at Catalysr, one of our alumni founded Driverly, and Driverly is an online platform for foreigners, so people who aren't Australian, to kind of check what are the requirements for them to validate their license in Australia, and depending on which state they're at, and then also it'll filter them through to to purchase driving lessons or time with a driving instructor and all that kind of stuff. So that business right now is in a really kind of precarious position, seeing as there aren't as many people coming into the country anymore that need to validate their license, and also that effectively, that's not exactly an essential, it's not exactly an essential service, or, you can't really social distance in a car with an instructor. What does a business like that do right now?
It's hard. It's tough for those businesses. So we were waiting for a long time. I do a lot of work with StartUp Oz, and there was big petitions for early stage and for pre-revenue businesses. to the extent that businesses like that don't qualify for JobKeeper payments for themselves or their team because they can't show a 30% decrease in revenue. There's not too much out there. They're not going to be serviced by a lot of the measures that have been announced, which is pretty hard. What we've seen from our base for those kinds of clients is what else can they access? So if they're building something and they may be eligible for an R&D grant, don't wait till the end of the year, sort of get going on that now with that aim to lodge it in July, which I know is still a few months away, but we go earlier. And if you're exporting, places like Austrade are committed to getting export market grants out as quickly as possible. For businesses that don't qualify for any of those, we found things like fundraising conversations have stalled, or at least they're taking so much longer. We've seen people who are in advanced talks with customers have those conversations stalled, or customers who have signed but they don't want to onboard, or they don't want to be invoiced until there's certainty. And it's not all doom and gloom, but I think it is probably at the moment a section of the market that's particularly hard hit, and there's not a lot of measures that have been announced right now that they can access, unfortunately.
Sure. So what does, what have you, like, I guess in your experience so far, you manage lots of different businesses. What would you say, I guess, to a client right now, just kind of blanket advice of, what's the best thing to do right now, I guess, financially, whether they are eligible or not, right?
Yep.
Let's assume that they are, I guess, or they're eligible for something. What's I guess the blanket advice you would give to a business or a business owner, currently affected by reduced trade because of this?
I think, well, not even reduced trade, for any business owner, because it's different for everyone. I think our big focus right now is you need to have a plan for 6 months. And I know 6 months is arbitrary, but it sort of aligns with some of the government measures and maybe a sort of expectation of when people might be back at work. But you need to have a plan. And for me, that means what's the leanest we could possibly run our business, or even if you're a sole trader, and what's the leanest I could possibly live on? What possible measures can I get access to? And as you said, maybe you qualify, maybe you don't. But on the basis that you don't, how lean can I get to? And I think it's one of those times where everything is negotiable. We've had people call up software licenses and get reduction. Almost all rent is negotiable right now. But if you can find a way to navigate a cash flow path between now and 6 months from now, then you have a chance of, or you have the best chance of reimagining your business and starting again when those conversations will pick up. If you are one of those businesses like those early stage who maybe don't qualify for a lot of stimulus measures, there's job seeker payments, which is now I think it's been boosted, but it's through Centrelink. But there's other payments you can get to personally supplement yourself, and I think it's a bit of a waiting game. But you just need to be able to be still alive in 6 months as a business, in any way you can, really. And I would push deferrals on every expense possible.
Okay. And last question from me before I guess we open it up to everyone in the room for the last 15 minutes is my personal observation has been that quite a few businesses all around the world have pivoted. Some less of a hard pivot than others. But is there any financial incentive offered in these packages, whether they be at the federal level or at the state level? Is there any incentive for businesses to pivot?
Not per se, but so for New South Wales, for example, there's an MVP grant, which is if you're building an MVP, you can go through this grant process, and they'll fund matched funding up to 25K. They give you 35% upfront and then 65% at the end. So if you are not trading as per normal and you have some additional time, you're right. We've seen many of our clients pivot. I think it's a great time to think about strategy. I think it's a great time. I mentioned before how lean can we run as a business, but then also what else can we do to protect ourselves in the future, or what opportunities have come out of this. The MVP grant that I mentioned is one potential opportunity to get funding to build something new, or to build a new type of product that has validation. I think funding is hard, like fundraising, so angel investment, but there's definitely opportunities to pivot that will become more and more fruitful as we get closer to going back to work.
Okay, great. Okay, well, I guess on that note, that's all from me. Does anyone in the group have any more questions? Just having a look.
I think, I saw one, what's the deadline for registration? If the business has been impacted as of March, then the deadline is 30th of April. So next week will be the week to do the registrations, to get employee declaration forms sent in as well. And we'll talk to you about that.
Okay, well, I guess we'll just wrap it up here. And so, yeah, so just to recap, we'll send around an email here with different links and resources that we discussed earlier today. So things like the ATO recently released tests for early stage businesses, and then other kind of resources to the things that we talked about here today. So things like pay-as-you-go tax credits, JobKeeper, depreciation, and then also the New South Wales and Sydney of City grants. Do you have anything else to add, Amit?
I was going to say from us personally, like, because it's been very stressful, hopefully all the stimulus measures have ended. But from a business perspective, something that you touched on at the very start was that the government has actually been reasonably responsive to changes. They've announced something, there's been pushback to say, hey, what about this section of the community? So if you are a business that's doing it tough, I know there's definitely industry bodies and all who are trying to identify those groups and fight. And don't necessarily think this is how it's going to be for the next 6 months. They're announcing things every day, and the city and the state are doing the same. So try and stay as positive as you can, and have a chat to people, reach out to advisors if you want to talk about these things, because it's always good to have a chat.
Sure. Okay, great. All right. Well, on that note, thanks so much for your time today, Amit. It was
very welcome.
Didn't talk to you again, and stay safe and at home. And great. Well, thanks everyone for coming. Thanks again, Amit. And
thanks everyone.
See ya.